And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, the whole enchilada. It's the Lance Roberts Show, presented by Clarity Financial. It's life, money, and sweat equity. Now, welcome in to the Lance Roberts Show.
Welcome to the Lance Roberts Show podcast today. We're going to be talking a lot of international stuff today. We're going to talk about the U.S.-China trade war. We're going to talk about Japan and why we look a whole lot like Japan in a lot of manners. But let's start off today with a bit of a market update. We've talked about over the last few days, after the sell-off that we had last week, we said expect a rally here. The markets had gotten very oversold on a short-term basis. And to use that rally to lighten up some positions, if you had angst, and again, this is always a good way to tell, while markets are rising, we tend to add a lot of equity exposure. We're chasing markets. We like the hot stocks, right? And it doesn't really seem to matter a whole lot as long as prices are rising. But if this recent sell-off really got you worried, you're missing sleep at night, you're worried about your portfolio, it simply means you've got too much risk in your portfolio. So use this rally that we're getting right now. And today was a continuation of that to a degree. But use this rally to try to reduce some of that risk in your portfolio and get it back into a more manageable level. Last week, we kind of laid out some various pathways that the market would likely take here over the course of the next few weeks. And the most bullish pathway is obviously a run back to the old highs here that we saw back in September of this year. I really don't expect this to happen too much. There's a lot of resistance between now and those levels. And so expect this market to trade somewhere within this current level that we're at now, maybe a little bit higher, kind of do some more sideways chopping, maybe moving into the end of the year. But look for opportunities here again to de-risk portfolios a bit. One thing that people did not anticipate was this big sell-off that we had in the markets last week. Of course, now that we're getting this little bit of reflexive action, this is a time to really reflect on how much exposure you have in your portfolio, etc. We did get back above major support in the markets. This is good news, and this gives the ability of the markets to trade here a bit higher. Markets ended up flat today, but the one concern here is if you really looked at the Fed minutes today. So Jerome Powell, these are the Fed minutes from the last meeting, much more really hawkish than I think a lot of people really thought that was really coming out. What the notes suggest is that the Fed is prepared to move interest rates above what's called the neutral rate. In other words, to make interest rate policy much more restrictive. They're also concerned, there's also some notes in there where they are concerned about asset bubbles. And of course, we've been talking about and writing about here for a while about the issue of asset bubbles, not just in the financial markets, but in the debt market, but in the housing market. Pretty much every asset class on the planet right now is in a bubble on many different fronts. So, and that's been a function of ultra low interest rate policies, lots of Fed liquidity and central bank liquidity being injected into the markets, created this rise in wealth assets around the world. So the Federal Reserve now really not as much concerned about asset bubbles, really, and trying to keep those inflated, actually willing to hike rates further. Now, the point about that is that is a signal, so to speak, of the fact that the Fed is willing to create an inverted yield curve, which will basically reduce the rate of economic growth in the economy and potentially cause other asset classes to decline in value. So, again, there's a real high probability that the high that was set here back in January and this nominal breakout to new highs here is really part of a broader topping process for the markets, and that whatever consolidation and advance that we get here over the next month or so will likely be a precursor to a further decline going into 2019, particularly if we begin to see weaker earnings growth and weaker economic growth into next year. So keep this in mind, and something we're going to talk about later today is really this issue with trade war with China and what's happening there, and we're going to be talking about that next with Li Shu. She is the founder of International Mergers and Acquisitions. We're talking specifically about the trade war, what it might mean to the U.S., and ultimately how this resolves itself, but also looking at, as we go forward, what this potentially means for the economy. I'm your host, Lance Roberts. You're listening to the Lance Roberts Show podcast here live at realinvestmentadvice.com. Don't go away. We'll be right back with Lee Hsu. She's the founder of International Mergers and Acquisitions, next on the Lance Roberts Show podcast.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertshow.com.